All right, so again, we have here a partial worksheet. Okay, so remember the worksheet, we have all of our accounts, then we had the balance from the ledgers, then we did the adjustments, and then we extended everything over. Okay, well these are the columns that we extended them to. So this is actually where we're working off of. You can see that down here we've got our net income calculated and those totals at the bottom. So that should look familiar to you. Okay. And then we are pretty much focused on this area down here. Okay, because this is where our sales are, and this is where all of our expenses are. And that's what we're closing out. Okay, and then we will come back up to drawing as well. Okay, so this is where you get your numbers from. It's the worksheet. Okay, and so when it said, when I changed, put the little parentheses here, the income statement credit and the income statement debit. Okay, so really, because when you get more complex worksheets, you may have several things here in this column besides sales. You may have other ways that revenue came in. Okay, so you would close everything that's in this column into income summary, and then you would close everything that's in this column to income summary. Okay, so it's just kind of broadening that definition a little bit. Okay, so these are closing entries. These are, nope, not drawing. Starting with capital and up. These are your permanent accounts. Okay, and then these are temporary accounts. Okay, and your temporary accounts will be a 0 at the beginning, and then we're going to 0 them out at the end. Okay, the permanent accounts just roll through it. Whatever they have at the end of one year is going to be the same as what they have at the beginning of the next. Okay, so let's look at what we're going to do first. The first thing that we need to do is to close the sales into income summary. Okay. Now, if this is a credit, we close it with a debit. All right. So you're going to have to flip over to your journal. It's on the back side. Does it make it easy for you guys to flip back and forth? Okay. But it says that on page 8, they want you to journalize the closing entries. And so just like adjusting entries, we're going to use a heading called closing entries. It's always going to be the last day of the month. So we're at the 30th. Notice that there's a little gap right there, and we're actually starting on line 6 and 7. So we don't have to put the year and stuff because that's at the top of the page, which they're not showing us. Okay, so we're just starting with 30 there, but only because there's a gap. Okay, and then sales is our debit. So debits go first. So sales of 2160. Okay, and then the second part of that, the credit, is income summary. Okay, so this, well, no, I'll come back. We'll do that later. All right, so the second entry is closing all of our expenses in income summary. Okay, so when we did our closing our expenses into income summary, where's our debit? In income summary, right? And then our credit is going to be the expenses. So debit has to go first, so we're going to start with income summary. Okay, and then really we have a list of expenses. And so, I mean, you can look at this total right here, but you may not have that total. So you may actually skip writing that number initially, go in and do all the expenses and then add them up. Okay, so we'll come back and we'll put that debit right there in a second. The credit part are all the expenses, and we've got to list them all. Okay, so going back, we've got advertising, cash short and over, insurance expense, miscellaneous expense, utilities expense, and all the numbers that go with them. Okay, so that's the next part. So this one entry is going to be a lot of lines, right? So first is advertising expense. $460. Okay, so if I look at this, this is a debit. To zero it out, I've got to do a credit, right? So that's where that credit's coming from. Cash short and over. Is 6. Insurance expense. $125. Miscellaneous expense. $189. Supplies expense. $153. Utilities expense. $550. Okay, and then if we add all those up, which is always good to do a check, the answer should be $1483, and so that's going to be our debit. Okay, and that's all one transaction. Our debits and our credits equal. We have one debit, but we have lots of credits to equal that one debit. Still good? Okay. So the third entry is income summary into capital. All right, so this is where you kind of have to think. That's where you have to think about those buckets, the water, the T's here. Okay, we've put into income summary a $2160 credit and a $1483 debit. So what's still in income summary? The difference between. Say it again? Yeah, the difference. Okay, so to do the math, 2160 minus 1483, 677. Okay, where else do we see 677? Right there, right? Always good to check it. Check the math. But it's coming off your worksheet as well. Okay, so because you were actually at this point just transferring the net income. Okay, so again, here's our balance. It's a credit balance. We zero it out with a debit and a credit to capital. So debit going first. Income summary for 677. And then Connor Whitney is our owner. So we're transferring that $677 to him. Okay, and then the last one is drawing into capital. So 30 again. Okay, so to close drawing, we have to zero it out with a credit, so we're going to debit capital. So the capital's got to go first because it's the debit. Okay, so now we're going to have Connor Whitney. Capital. And then also Connor Whitney drawing. All right, and so you have to come over here to get that number. So we'll need that number as well. So 1,700. Okay, and we all used all of these. Okay, so these are the numbers we used off of our partial worksheet. Okay, and we also identified these numbers as well. All right. So, just to kind of see what we did here, is we had, originally in our worksheet we had a sales credit of $21.60. Okay, and our expenses, we had a total of $14.83. We used our income summary account. All right, so to close sales, we put $21.60 here as a debit, $21.60 here as a credit. To close expenses, we put $14.83 here to zero it out as a credit, and so we had a $14.83 debit here. The difference between these two was $677. That's our net income. That's got to get transferred. I'm going to keep it on that side. Okay, that's our new balance. It's still an income summary, and we've got to zero this one out now because this one's just temporary. So $677, zero it out over here with a debit. So $677's got to go in as a credit. Okay, and then you had your drawing of $1,700 that came out as well. Okay, so that's what we just did in T's, which is just like what we did in our first sample as T's. Okay, so let's see. Let's add a note here. You have to close with an opposite entry. Does that make sense when I say opposite entry? Okay, if it's credit here, you got to debit. If it's debit here, you got to credit, right? That's how you close it. Okay, and then just to note what we did here. This one, we closed revenue into income summary. This one, we closed expenses into income summary. this is closing, or really transferring net income to capital. And then this is drawing to capital. Okay, so I really hope that you take the notes and you take the drawings and things that we did and really understand those steps. What I see you guys doing is picking up the pattern. Sales, income summary, right? And you just pick up that pattern of what it's supposed to look like every time. Okay, that's not really learning the accounting part. That's just learning the pattern to it, which could change once you get into more complex real life things. So it's better if you can really understand these steps and what we've been doing. So that's why I tried to break it down so many different ways today. Did it help? Are we grasping it maybe a little bit? Okay. So what we're doing in this chapter is basically we're going to journalize. We are going to post these closing entries, just like we posted the adjusting entries. Okay? And then once we post these entries, those ledgers will be at 0. They'll calculate themselves down to 0. And like I said, we want to close them out, we want to 0 them out, and that's what you'll actually see in the ledgers happen. Okay? And then what we're going to do is what we call a post-closing trial balance. Okay, and that's just kind of a summary of all the accounts that we still have money in, like cash and supplies and accounts receivable and things like that. Okay, and if you look, that's step 9, right? Post-closing trial balance, the last step of the cycle. Okay, so we're almost there. All right. I think we're good for today.